Hello guys, and welcome to my YouTube channel once again. So in today's video we are going to be analyzing this particular pair here, VIX 10 1AS index. And as we can see, this is the weekly time frame. We want to do a top-down analysis. Then looking at what we have on this chart, we see that the market is trying to sell from a very strong zone of resistance, which is right here. You can see the market has been buying and selling from this zone. You can see the buys here. Okay, you see the sales here. Market sold here, sold here, broke through it, came back and retested here for buy. He tried to buy again from here but couldn't. Then we had an attempt for a sell here the first time, second time, then it sold again. Then we had this market getting back to this same zone. So right now we are expecting some massive sells. And besides, we had a bearish engulfing candlestick here on this resistance zone, which also marks the which is also an indication the market will sell. All right, I believe my students who understand our engulfing candlestick strategy will see what would have happened if you enter a trade here on enter a sell trade after the formation of a bearish engulfing candlestick. At this point, you see you'll be in a very deep drawdown because your entry will most likely be here on the close of this bearish candlestick. Then you see that the current week's candlestick did not start selling immediately. Instead, it bought first up to this level before it started selling. All right. Meanwhile, let's leave it at that. I wouldn't want to explain the engulfing candlestick strategy right here. Okay, so we are expecting more sells to the downside, but before then we have to go down to the lower time frame to in order to really define or refine what we want to see or how we can easily enter this trade. All right, let's go to the daily time frame. So on the daily time frame, you can see the structure we have. It looks like a head and shoulders pattern. Then this looks like the left shoulder. This is actually the head, and this is the right shoulder. All right. I think when I had a class today with one of my private students, this is what I told her. I showed her about the engulfing candlestick setup here on this daily time frame, which would have been a very massive, a very nice opportunity to enter this trade at the sniper entry. You can see it sold from here up to this level, and it is actually at the neckline of the head and shoulders pattern. So what are we looking at? We are looking at a possibility of the market going below this zone, because as you can see, this is a zone the market has been rejecting for a while now, for some days. Would I say days? Because this is a daily time frame. So after the market was able to break through this zone, then retested it with this bearish candlestick, ever since the market has been finding it difficult to break through this zone. The only time it was able to break through this zone, it couldn't even close below it, and we still have bullish candlesticks. This, how many days now? This is 1 2 3 4 5 6 7 8 9. I think it's up to 2 weeks. Up to 2 weeks, the market has not been able to break and close below this zone. So if the current candlestick here on the daily time frame is able to break and close below this zone, then we'll be expecting massive sales on this pair. Besides, we are seeing a head and shoulders pattern here. All right, so once the candlestick breaks and closes below this zone, we should be expecting some massive sales. But this is what you have to take note of, guys. Let's just zoom out a bit. I want to show you guys something, because the problem with so many people who believe break and retest does not work is because they do not know how to use it, guys. All right, so this is actually the neckline. Then you will be expecting the market to just hit this neckline and start selling. Though it happens sometimes, but to be on the safer side, you look at where the market has sold massively from. You see, as I extend this, you can see that, meaning that the market, there is a chance it might want to buy up to this level before it starts selling. That is after the current daily candlestick has closed bearish below the zone below here. Then tomorrow's candlestick, if the current candlestick closes below this zone, then tomorrow's candlestick, we will want to see it buy up to this level. We expect it to buy up to this level before we think of taking a sell on this particular trade here. All right, so if you can be patient enough for that to happen, you see you'll stand a higher chance of getting the sales at the sniper entry, and even with a very reduced risk. The risk involved will be very low. All right, So, and also if you want to look at this, let's bring a trend line. You can see it's trying to give us a continuation or even a reversal strategy or setup. Let's place this right here. Let me see if I can just get this done correctly. Okay, we'll duplicate this and place it right here. Let's see what we get. Okay, so you can see there's a very high chance the market will be selling because of this structure that we have right here. Okay, so mind you, there's this thing you guys still also have to take note of. Let me bring this down to where we want to see the market closing below this. We want to see the market break and close below this zone right here. All right, let me take this back, make it smaller. Good. So now, one thing you should also take note of, we are seeing this on the daily time frame. If you go to the hourly time frame, you might be tempted to, you might see the current hourly candlestick might decide to close below this zone. It is risky to take a sell trade when that happens. It is very risky because the consolidation is not on this time frame. Take note of that. That is why people do not understand when the market has successfully broken out. You will be trapped by a fake out because you do not you have no idea which particular time frame candlestick that you're supposed to look at to confirm there is a breakout or not, if the market has broken out or not. But for now, I'm telling you guys, until there's a breakout on the daily time frame, a break and close below on the daily time frame, whatever candlestick you'll be seeing the market breakout is gonna be a fake out. In fact, let me not say it's going to be a fake out, it will most likely be a fake out. The only four candlestick that will close below this zone and then that you close below this zone and you confirm, okay, the market has successfully broken out, is the the last four-hourly candlestick of the day, the one that after it forms, the daily candlestick closes, the one that closes exactly the same time with the daily candlestick. That's the only one, except that, I don't know if you guys understand what I'm trying to explain here. I believe my students will do, because I try to explain these things in my mentorship. All right, meanwhile, there's a link in the description of this video. You just have to follow it, click on the link, it takes you to my Telegram channel. You may want to enroll in my one-on-one mentorship, my private mentorship, then you can find my direct contact there. All right, so like this video, share your thoughts in the comment section, and then meanwhile, remember what I've told you. If you want to take an entry for this pair, guys, do not just wait for the retest on this zone. You may want to see the market retrace to that zone we saw on the daily time frame. The market you most likely want to get back to that zone. I'm talking about this place. Let's say somewhere around here. Your entry should be somewhere around here, and the stop loss can just be a little above that zone, little above that wick. Then the sales will be like how do we call this thing? Is it a waterfall? It's going to be like a waterfall. All right, because we'll be seeing some massive sales if that zone is successfully broken. All right, so it's as simple as that. It's not difficult. Just try to practice these things, look at other pairs, try to replicate what you've seen. Always wait for the market to get to a good zone. Don't enter a trade from the middle of nowhere. You'll be risking a whole lot. And also try to ensure that your entries are not your stop loss is not too large, and it's not also too small. It has to be commensurate to whatever you're willing to risk. All right, it is very simple, guys. With practice, you'll master it. So I'll see you guys in my next video. Stay blessed. Peace out.